Hi, this is Alessio. Hope you're well. Today is another day of my staycation here in Torquay and obviously the English Riviera. Just behind me is an amazing view of the sea, the English coast, and just behind me you got an amazing view of the little bit of a green area, as you can see here. All right, guys, in this video I want to talk to you about one of my favorite strategies for trading and also investing. Now, let me just say, even though it's one of my favorite strategies, I do want to just make sure I mention there's a lot of risk attached to this, so it's not for everyone. I wouldn't recommend this for amateur traders or amateur investors. It's really for experienced traders out there. So essentially how this strategy works is, let's imagine that the market has a major crash or a major drop. This market could be anything. Could be Bitcoin, could be stock markets, could be any stock like Apple, Microsoft, whatever you want. Now let's imagine that the market, the price, has a major drop, again a crash, and let's say it comes down to a price level that you might like. Okay, so as you may remember, back in March of 2020, the price of Bitcoin dropped significantly from about 8K to 4K, approximately 4K. And also the stock market dropped by 34% from about 3,400 to all the way to just below 2,200. So the strategy I'm talking about is called nibbling. Okay, now, let me just give you some more information about that. Imagine, for example, a kid in a candy store. You know, imagine when you were young and you walked into a candy store and you see all these different sweets out there. You got a cola bottle, you got the sherbets, the strawberry sherbets, and as you're walking around just picking a little bit of sweets, nibbling, boom, 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 and pick another sweet over here and then chew a little bit there. Of course, you want to pay for it at the end, obviously. So anyway, now imagine, for example, I was holding a donut in my hand, okay? So let's say you take a bite of that donut, little tiny little bite, and then nom, 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 nom. And of course, you know, that's the whole idea of nibbling is you're waiting for the price to come to levels where you quite like, you might actually find attractive, and then you're just nibbling with small positions at those levels, those price levels. Now, the key word here, guys, is small positions. We're not talking about big chunks. So we're definitely not taking big chunks from a burger, just taking small nibbles on the price. Now, in case you're wondering why only small nibbles, why only small positions, not big positions, because of risk. Because if the market is dropping, like it did, for example, back in March, you may recall stock markets dropped quite significantly. And in fact, you may remember that the price kept dropping lower and lower. It fell to 2,700, 2,600, 2,300, 2,200. It kept going lower and lower. So let me just say this. I would only nibble on the price on two conditions. Firstly, I need the price to be in a long-term uptrend. Okay, so if the price is in a long-term downtrend or a long-term bear market, if the price has been a bear market for many months and years, forget it. I'm not doing that because the trend could just keep pushing the price lower and lower. So I would personally only attempt the strategy of nibbling based with small positions only when price is in a long-term uptrend. Okay, has been a long-term uptrend like the stock market was. For example, the stock market, the S&P, has been a long-term uptrend for many years since 2009, and in 2020 we had a major drop. But remember, we dropped down in a long-term uptrend to some key support levels, and in fact the market became oversold as well. The same thing I would say also with Bitcoin. So that's one important criteria. Price has to have been in a long-term uptrend. The second criteria is this: price has to become extremely oversold, overstretched, and I want public opinion sentiment to become extremely negative and extremely hated or panicky about the price. So when we have those conditions, like when price crashes and drops and becomes extremely oversold, extremely overstretched, and indeed overly pessimistic, then I become interested in nibbling on the price. That simply means, you know, taking small bites of the donut, or taking small little nibbles on the sweets and the candies. The candy or the price being, of course, whatever you want it to be, whether it's Bitcoin, crypto, or stock markets, or any stock out there. Okay. So the reason why, again, we're nibbling on the price is because of risk. The risk the price could continually moving lower. Remember, guys, price can move lower in these kind of situations because of sentiment. Sentiment can get worse and worse, pushing the price even lower. So that's why we don't want to actually try and catch a falling knife. And I know you're probably thinking, well, we are trying to catch a falling knife. That's true. But remember, that's why we're taking small nibbles on the price. That's why we're nibbling with small, tiny little positions, like 0.5% of a position or 1% of a position. And we're trying to build a small position, okay, at the price levels we like, and waiting for the price to actually bounce back, and it make a reversion to the mean. Once the price has a small reversion back to the mean, to the averages, then we can actually put a stop loss, like a mental stop loss or a physical stop loss at the recent lows the price made. Okay, now of course, the choice of what kind of stop loss you may choose is up to you, a physical stop loss or a mental one. The bottom line is we want to make sure to protect that risk. Okay, So anyway, guys, that's basically what nibbling is. And let me also mention that this is not a strategy for beginners or new traders. It's really for more experienced traders out there. As I mentioned before, guys, also it's important to control the risk, limit that risk as much as possible. Again, that's why we're nibbling on the price and using some kind of a stop loss as well. A wide stop loss at first, but again, moving the stop loss closer later on. One of the beauties of this particular strategy is that, you know, when price drops down to some attractive levels, attractively cheap levels, it at least gives some flexibility in getting into a position at the price levels we like, again by nibbling on the price at those levels.
Hey guys, before I finish the video, I just have a quick favor to ask of you, which is if you live in the south of England, for example, if you live in the East Sussex area of England, or if you live near Hastings or Brighton, then I would really appreciate it if you could kindly visit my good friends at Kassa Optics. Now, Kassa Optics is a family-run opticians, and it's run by good friends of mine, as you can see here. And let me say that I've known the people who run this business for quite a long time. It's a husband and wife team, and they run a fantastic opticians. It's a family-run business, and of course, I actually think they're one of the most hardworking and honest people you'll ever meet. And if you're looking for an optician that's going to give you value for your money, then they're the best people to see. So if you haven't been to the opticians, if you're looking for opticians who are going to give you value for your money, then do please visit Kassa Optics. In fact, I'll leave the details for you there in the description, also on the screen. Give them a shout, make an appointment today. Really would appreciate it, guys. Thanks very much indeed. Let me also say they're not sponsoring this video or my channel. I'm only mentioning them because they're fantastic people. And again, I want to try and help them as much as I can. So again, I'll put their details for you in the description. Thank you very much, guys. I really appreciate it. Bye for now.